5,300 or so on both those indices. Mid-cap index is down 0.5%. The small-cap index is down about 0.4% or so as well. So this is, the lay of the land right at the word go. Oh, wow. Just 70-point cut now coming through on the Nifty right now. So this is a third of a percent lower. That's it. Bulk of what is starting right now on the Nifty heat map is lower. And you've got a few names which are higher at this point. And Sridhar was talking about some pharma technologies there, but again, has been sold into quite heavily. Otherwise, about 40 of the names, 41 names are lower. Surabhi.
Okay, so 62 points lower. Let's see where the weakness is coming in from. Let's start with Trent. Numbers came in. Now, the margin picture is better than estimates, but the top line growth is 19%. The market doesn't like that. So first reaction is negative. Bajaj Auto has been trying to reassure the street that growth will be fine. I mean, their domestic outlook is, I think 6-7% growth. Again, stock's still under pressure, 2% lower. Even Bajaj is talking about holding margins, but the market wants growth, and that seems to be missing. Let's look at what else. Kotak Mahindra Bank, where we're expecting big trades today and maybe some foreign investors cashing out. That stock's about 1.5% lower. There's Eternal, where again there's block action. That's anticipated. Eternal is also lower by about 1.5%. Tata Steel, Coal India, Shriram Finance. I'm just reading out the list of Nifty losers. And then you have the biggies, Reliance and SBI, both exerting downside pressure on the market this morning. So let's see what's holding up. Not too many stocks, actually. Some buying on Cipla. Hero Moto is seeing some traction, 0.5% up after its numbers. And there's a little bit of a trickle here and there on Nestle and ITC. But the short point is that there is no real leader index or any sort of a counterweight sector today. It's largely soft and somber. And the Nifty is trying to, put up a fight at 24,500 now. Nigel.
Well, the stocks that are getting knocked are the usual suspects, right? Wellspun Living, that stock is pulling back in today's trading session because obviously US market's a big one for them. It's already seen a lot of selling pressure in the last few days. That continues to be the case. Gokuldas Exports, that's the other one that's getting a bit of a knockback. What else is losing out? You have Prince Pipes. They came out with a set of numbers. So the time being, the street doesn't like it. That stock is down more than 5%. Volume's pretty large on that one. JSL Stainless, actually the numbers look good. The problem is the global uncertainty. And remember, exports for them were around 16-17% till around, I think, 8 quarters or so ago. That number's come down to sub 10% for the last many quarters. We'll have the management later on during the course of the day. Stock goes on with a cut of around 4.5%. What's the way ahead? How can they mitigate the losses on the export front? So that's another stock. Sarada Energy, that's the one that's been running along. One of the best results of this season, I think so. And we had the management speaking to us here exclusively on CNBC-TV18. They're talking about the EBITDA number go up by more than 40% in FY26 with debt reduction. So that stock continues its upward journey. Rain Industries is another one that's reacting favorably to its numbers. So that stock as well is up. I'm looking at the Lumax group of stocks. You have Lumax Auto, actually, that is higher in today's trading session. So that one, in fact, has moved up smartly. While you have Lumax Industries, I think that came out with a set of numbers. That's down close to around 6%. So both those two going out in opposite ends. Sanghi Movers, that's another one. The renewable play, the cranes play are out there. That's seen a sharp correction from the recent peak, but for the time being, it's popped up close to around 4.5%. And Godfrey Phillips, a stock that we here on CNBC-TV18 had given you a heads up. When Philip Morris came out with a set of numbers, the commentary wasn't great on the whole, but the commentary on India was good, which gave you a bit of a read-through. And that's why, in fact, that stock, it opened up. And now, in fact, after the big run that we've seen, more than 10% move is what we've seen in the last few trading sessions. Well, that one has come in for some mild profit taking from the high point of the day. But down only 60 points. For the time being, it appears the street is digesting that peak Trump tariff tantrums are behind. At least that's what it appears like.
That was the question, Sridhar, if I can go back to it. Yes. I mean, how much worse can it get, right? Earnings, Trump tariff tantrums. Are we close to a bottom?
So we've seen I would say a time correction for almost a year now. You look at large cap, mid cap, small cap, almost all of them have been flat to mildly negative. And I think if you go back a year before that, which is exactly a year back, the consensus was that we had a very strong run-up. And we had earnings disappointment, which came through. I think the earnings disappointment may continue for maybe another 1 or 2 quarters. Finally, it's only when earnings start to, come is when we see the markets go up. We may see some more time correction, maybe for another 3 months. Very difficult to gauge this. I do expect that second half will be better, which is festive season starts early this year, so you could see a slightly better, outlook. Also, what I'm gathering from my Delhi sources is that some big announcement on August 15th. I don't know what, I have no clue, but this is what I've been told. Some big announcement on August 15th. Obviously, if you see the Twitter feeds of various people, they're talking of some reforms. I don't know what reforms, I have no idea, but I hope the government wakes up because we haven't seen any reforms in this term. So hopefully it's overdue, and we always do well when we are faced to our backs to the wall.
You know, one of the I remember speaking to two economists based out of the US, and both one was from Princeton, the other one was from another university. And both actually were saying that maybe this will force, it'll kind of watch exactly what you're saying. I mean, us to do things which needed to be done. Maybe it's an impetus, which is not necessarily in the long. It looks tough now and looks, it's like, you're forcing us to do it, but in the long run, it doesn't hurt. Actually, it perhaps helps. Pankaj Tibrewal is with us as well, founder and CIO at Ikagai Asset. Pankaj, good to have you with us here on the program. Thanks very much. What is your assessment? I started by asking Sridhar, how do you even sort of talk through some of this 50% business? What is your sense on markets? Let me actually put it in a very sharp way. Is this likely to today is absolutely steady, nothing really, but is this the way you think it'll likely be? Or slowly, this kind of starts to seep in, worry? As Sridhar also pointed out, even if this 50% eventually is negotiated lower, the broader question is the relationship perhaps is soured and that needs repair. And foreigners have been big sellers, right? $10 billion this year so far. So that's the question, Pankaj, for you to start with.
You're on mute, Pankaj.
Yeah. So, Prashant, if you look at tariffs, 25% or 50% doesn't matter because no businesses operate at such high margins that they can absorb 25% or 50%. So it's a number. But what it brings is a lot of uncertainty, and markets don't like uncertainty. And I think my sense is that we have to look inwards. And as Sridhar mentioned in his earlier remarks, that we haven't done anything on the economy side from a government perspective. I think it's time to probably think inwards and start doing the reforms, because if you put numbers into perspective, our sense is, excluding pharma, electronics, others, $18 billion of exports get impacted. And that's roughly about 0.4% of GDP. How do you negate that? I think it should be the brainstorming which should be happening among corporate India as well as government. And I think this is a time to escalate going forward. Look at what China has done in the last 3 months. There was pressure on tariffs and other issues, and they have moved into the anti-deflation mode. And last 1 month to 1.5 months, all commodities are climbing up massively, whether it be coking coal, polysilicon. And they are announcing projects which the world hasn't heard of. The latest hydro project, $170 billion. And so many other projects will follow it to it. I think we have that appetite to do as well. So in the near term, I think uncertainty will be large, but I think markets are behaving very maturely. If you look at for the last few weeks. But one thing to note, Prashant, this is not an easy market. Market breadth is narrowing down substantially. The easy money, which we saw for the last 4 years, I think is behind us. I think markets are rewarding growth and earnings over a period of time. And if you look at the last 1.5, 2 months since the market has been correcting, there are only few pockets which are performing. Otherwise, it's a very, very tough market to generate returns.
Hi, Pankaj. Good morning. Good to see you. And it reminds me when I used to come home from an exam and Dad used to ask, how was the exam? I used to say, it's difficult. He said, exams are meant to be difficult, Nigel. But this market's tricky. And you have to look at, various segments. I think one segment or one piece that you have liked is chemicals. I recall a few months ago, you had called out for the bottom. And from there, actually, quite a few stocks have done well. Would that be one of your top themes that you still believe presents an opportunity?
Yes, I think, Nigel, if you look at the overall chemical segment, barring the uncertainty in the near term, there are two big macro developments which are happening around the globe. One, I think China, as I mentioned, has moved into the anti-deflation policy, where chemicals has been one of the sectors where they have created enormous capacities. And if you look at in the last 1.5 months, all chemical prices have started to inch up, and it's the government dictate that please close down excess capacities in China. So that's a very, very important point to note. And the second important point to note is that the large chemical companies out of India cater to agro. Very few cater to pharma. And from an agro perspective, for 3 years, we saw a destocking cycle happening. Our sense is that that's coming to an end, and probably the order inflows and the demand from agrochemical side will start to escalate. And the third most important is that we are calling for a Europe upswing in the economy. Our sense is markets follows first, economy follows later. And in Europe, we are seeing that unification of many countries in Europe after this Trump issue coming together. And could be that CY26 could be a surprise for European economy. Early green shoots are to be seen. And if that happens, the agri-related sector can do well. And a lot of chemical companies catering to European markets can also do well. So our sense is that chemicals is one area where we believe near-term uncertainty related to tariffs definitely there. But if you take a slightly longer-term view, I think many companies have created that moat around them. And for the next couple of years, we believe that the earnings growth will be far better than the overall average market growth.
See, if I was copy editing or writing a sales side note, I would call it the Braveheart call, right? That is Pankaj's Braveheart call for the morning. Go with chemicals, look through the noise right now, the tariff noise, and it'll serve you well. But Pankaj, what else? Good morning, by the way. What else? The thing with the market is that the no-brainer trades are not working. Earlier, when there was market uncertainty, when things were off, you would go buy pharma and IT. But now people are very scared to do that. And you'd go buy financials. But look at the first quarter earnings season. There are asset quality issues. Credit costs are going up. Margins are under pressure. So then give us some more names, because the no-brainer segments are confusing right now.
So, Surbi, if you look at our senses, whatever the weakness in economy you are seeing is because of the tighter policy we ran till CY24. And whatever good has happened by RBI and our regulator in the last 4-5 months, you will start to see pick up from September to December quarter onwards is our call. There will be one more quarter of pain on financials, largely the private sector banks, because of the NIM pressure. But third quarter onwards, as the deposit starts to reprice, we will see better earnings growth. And FY27, if you take Nifty as a whole, banking sector will be one of the biggest contributors in terms of earnings growth. The second, our sense is consumption. Though consumption is weak at the ground level, but early green shoots have been started to be seen. Even managements on their conference calls are calling out that rural is doing well, and earlier green shoots are to be seen on the urban side also. So consumer durables, small ticket purchase items, I think all should start doing better as you move ahead into Diwali, Dussehra, and the festive season. So our call is consumption should be one space, especially the discretionary names. And the second part could be financials. You have to bear one more quarter of pain in financials, but December quarter onwards, I think the NIM pressure will subside and asset quality at its peak. I think you will see better times, and credit growth, which has come down to 9%, should start moving to 11-12% is our sense. So these are the pockets where we see opportunity coming in. And last but not the least, I think the pharma and especially the domestic and the CDMO place, I think that's clearly an opportunity whenever market is offering decline in this uncertain environment. That's one other area we should be focused on. So that's broadly is the thought from an overall sectoral perspective. But let me again give you a caveat that this is a stock pickers market. In this earnings season, we also saw the dispersion within the same sector is very, very high. One company is reporting 25% earnings growth, other is reporting a 20% earnings decline. So you need to be very, very focused on which companies you are betting, which promoters you are betting, which cash flows and balance sheets you are betting. In this really next 1 or 2 years, uncertainty, I think managements will play a major role.
Sridhar, you have any likings, anything you'd want
I broadly agree. It's a bottom-up stock pickers market. But broadly, I would say the same. Wherever you have earnings, like power equipment is a space that we like. EMS is a space we like. But they're all very expensive. But they're also showing very strong earnings growth. So they're showing 40-plus earnings growth. So I think market's starved of growth. So wherever you're seeing growth, people are just hanging on to it. with whatever valuations.
Actually, the other day we were just counting in the studio areas with 15-20% growth visibility. Hospitals, there's power equipment, and capital market, right?
Yes.
Which is asset management.
Yeah, which is the other interesting space.
Which is the other interesting space.
But it's a cyclical space, right? So you will see ups and downs. But if you remove the cyclicality from there and you say, I'm going to hold for, say, 3 years, 5 years, and you assume that markets give you 12, 13% returns, then they will have that sort of earnings growth there at least, plus the volume growth of newer people coming in. So it looks interesting, but it's not a straight line. That's what you have to
You know, I know, Sridhar, you look at pharma very carefully. So where are we at? Will we get these tariffs on pharma or no? Because it's not... You heard that interview that President Trump gave to CNBC US, right? Towards the end, actually, he said it's coming in within the next 1 week or so.
Yeah.
And he said, I like to call them excluded tariffs. This section 232.
So I'll be very surprised. As I said, I follow RFK Jr. very closely. I think they're doing a lot of reforms in the US, specifically when it comes to big pharma. And if I look at the agenda seems to be to bring the healthcare costs down. I find it strange that it's not like you can replace generic pharma from India to some other country, because it takes a lot of time, FDA approval. There is a host of things that is to be done. So it looks very difficult to me that it can be done.
You own pharma names?
We do own pharma names, and we like pharma names. Okay. So we don't think the tariff is coming, but even if it comes...
It's been an overhang for a while.
Yeah, but I'm just saying, even if it comes, there is no replacement for that. So these drugs will go to the US. Eventually, the consumer will have to pay. Nobody has that much of margins in India.
Absolutely, and that's a point that I think a lot of the pharma companies have been making as well. They can't overnight replace. And I think Indian drugs comprise almost 40-45% of the total pharma market in the US. So it's a huge number. You cannot replace it overnight. So we'll have to wait and watch. Thank you very much, Sridhar. Great to have you in the studios today. And thanks to Pankaj as well for joining us. Short notice, but we live in very, very interesting times. So really great that both of you could make it to us for this conversation. Well, with that, we'll get to some corporate commentary and corporate conversations as well. Quick glance at the market. The market's absolutely fine. It's just 34 points down on the Nifty. To Prashant's point, if Mr. Trump is watching, he'll be very disappointed, saying, what is this? Indian rupee is not falling. Indian equities are also not falling this morning. What are these Indians up to? On a lighter note. Anyway, let's talk about Torrent Power. We're looking at the company's Q1 performance. We have what looks like a bit of a muted start to the year for Torrent. There was, of course, lower power demand. That seems to be an overarching sort of overhang on many power producers. We have Saurabh Mashruwala, CFO of Torrent Power, joining in. Saurabh, let's start right there. How much of this Q1 subdued sort of numbers, how much would you attribute it to just lower power demand? And do you see signs of a pickup?
It is mainly because of the early onset of monsoon, as well as the higher LNG prices. It has impacted the Q1 of the Torrent Power. Same is the impact with the other producer also, particularly in terms of merchant power. But going forward, we have a contract with the NVVN, which is about a 6-month contract. So partly this contract is being used in the Q1 quarter, and the balance contract will be used in the Q2 as well as Q3 contract also. So hopefully, and the merchant demand is all depend on the weather condition and how the weather pans out in India. So that will impact the merchant power. So, but we are hoping that this NVVN contract, which is being utilized in next 2 quarters, will be helpful to us in terms of merchant power.
Can you give us some numbers and some rates we can work with? In general, I mean, are you expecting improvement in spot prices, and also on your merchant tariff side? Where were you at the end of Q1, and as some of these new contracts come on stream? Overall, your realizations on the merchant side, how will they shape up?
So it is up to the expected leveling, I would say. But going forward, it will all depend on the demand supply situation, particularly the peak power. I would say peak power deficit. I would say it will all depend on the peak power deficit.
Okay, all right. Hi, Mr. Mashruwala. Good morning. Good to see you, Ben. What about inorganic growth? There are various reports that indicate that Torrent Power is looking at L&T's power business, the Nabha project. Any truth to that?
We can't comment on the speculation at this moment.
Do you want to deny it?
No, we can't comment on this. But we can always, we have an expansion plan, our own expansion plan. We are growing in renewable. We have about 1.8 gigawatt renewable capacity currently. We have about 3 gigawatt renewable capacity under construction right now, which entail investment about 20,000 crores. We have a storage expansion plan, pump storage expansion plan of 3 gigawatt in total investment of 14,000 crores. We are also, as you know, we are also in the distribution side in franchises licensed distribution area.
So, sir, we'll just get back to your expansion plans, which sounds very interesting. So, do you think L&T's, power project could be a strategic fit for y'all? We'll have to see how interested y'all are, but that could fit in well strategically.
We are looking at coal asset also, either greenfield or brownfield. So that is in the investment horizon, I would say. So, but it's too early to comment on this Naba power project right now. But so we are definitely interested in having a coal asset, either greenfield or brownfield.
And how much would you be willing to pay, or if you have to give it on a pay per megawatt or something on those lines? What would be attractive if you have to set it up by yourself and if you have to buy it, from the inorganically?
It depends on the quality of asset. It depends many factors, I would say. It depends on the quality of asset, PPAs, balance period of PPAs, coal linkage. So we can't put any set numbers, I would say.
No, okay, so let me ask that question slightly differently. From a balance sheet perspective, Saurabh, just give us an update on the balance sheet, even cash levels, and if you have to take on debt to acquire a large thermal asset, how much debt would you be comfortable with? What is the kind of the size of an asset that right now you think you'll be able to digest? Because you made it very clear that you want a coal-based asset, in your portfolio.
Yes. So as far as balance sheet is concerned, we have a very strong balance sheet. We have about net debt to EBITDA of 1.4, which is very, very strong, I would say, which is very, very comfortable, I would say. Debt equity ratio is 0.40, I would say, which is unheard, I would say, in terms of infrastructure company. So balance sheet side is very comfortable and which can take up a significant quantity of debt also for the expansion project. In fact, we have 50,000 crores expansion project under pipeline. So where we generally borrow 70% of the debt. So balance sheet is quite comfortable, I would say, to take up the debt.
So by when can we hear of something, this inorganic plans on the thermal side? By when? Next couple of months?
So we are working on many opportunities, I would say, in the renewables side also, in coal also. So it's an ongoing process, I would say.
So for this Naba project, so the reports indicating around $1 billion. Do you think that would be a fair estimate for whoever is buying it? May not be y'all, but you have to put a rough value to it, given its strategic location, given the quality of the asset. Could that be a fair number?
We can't put any numbers on it right now.
Okay, let's, not putting any number on it. So let me talk about your regular organic growth again. I'm going back to the merchant side because a lot of the street experts also point out that lower merchant contribution led to the slightly soft performance in Q1. Can you give us some update? What is the kind of volume you'll do? How are merchant tariffs shaping up? And basically, what can we expect from your merchant business? How much more growth volumes going into Q3, Q4?
So we can't give the guidance. It all depends on the weather patterns, weather condition, I would say, in the country. And particularly, as I said, the NVN contract is a 1.3 gigawatt contract we got. It's spanning into 2 quarters, I would say. So Q1 contract was partly utilized. The contract will be fully utilized in the going Q2 as well as Q3 also.
Just for the sake of clarity for our viewers, this MVN contract, this is in Maharashtra. Can you just elaborate on which contract this is?
It is as sourcing power for the meeting the peak demand, peak requirement, I would say. Some crunch period demand, I would say.
Okay. So this is going to take your overall realizations and volumes up by how much?
About 1 billion, 1,000 MUs contract, guaranteed MUs they have to pick up, they have to take. So this is a guaranteed amount. That contract will be utilized in Q3 as well as Q4, Q2 as well as Q3.
Okay, all right. So what about your CapEx plan? Could you break it up for us? You mentioned a couple of big numbers. For this year, how much will it be? And for FY 26, 27, 28, break up your CapEx plan for us.
So CapEx plan, we are expanding our renewable capacity from currently 1.8 gigawatt to another 3 gigawatt, which will be commissioned in the next 2 to 3 years, and will be the CapEx plan of 20,000 crores. We have one contract with MSCDCL, pump storage contract with MSCDCL in Maharashtra, about 2 gigawatt, but we are setting up 3 gigawatt pump storage capacity with an investment of 14,000 crores. That project will come up in the next 4 to 5 years. We, as you know, we are in the distribution area also for license distribution area, consumption distribution area. We are also looking for new acquisitions of new areas also in government for privatization and in UP as well as in Maharashtra. So that also we are keenly interested. In distribution side also we have capex plan about more than 15,000 crores. So put together about 50,000 crores capex, committed capex plan I would say is on the horizon. Additionally, we look at the coal asset also, greenfield, either greenfield or as well as brownfield also.
Okay, all right, Mr. Mashruwala, we'll leave it on that note. Thank you very much for joining in and giving us some perspective on your business. That's Torrent Power at the end of the first quarter. We need to take a very quick break. On the other side, we will get chatting with the exporters of India. Sudhir Sekhri of Apparel Export Promotion Council and Vipul Shah, former chairman of the Gems and Jewelry Export Promotion Council, will join in to discuss the implications of Trump's tariffs on both gems and jewelry as well as textile and apparel exports. Welcome back. So the market's dealing with a cut of about 0.3% for the time being. Mid-cap index little better off the mid-cap. So there's no major slide. That's the short point. The market's trying to digest all this news. And let's see if we get buyers further on in the day. For the time being, let's try and understand the impact of these new tariffs and the additional tariffs that have been levied on India on both the apparel and textile industry as well as the gems and jewelry sector. We have Sudhir Sekhri, chairman at the Apparel Export Promotion Council, joining in. And we also have Vipul Shah, former chairperson of the Gems and Jewelry Export Promotion Council. Gentlemen, thank you very much for being here with us. Mr. Sekhri, let me start with you. Now, for a moment, if I say let's forget 50%, let's leave out this additional oil penalty. Even if we're working with 25% tariff, Indian apparel and textile exporters, does it make the business in the US totally unviable, semi-unviable? What happens? I mean, and what do you expect in the next couple of days in terms of just the conversations with US buyers?
Well, okay. You know, the 25% that was imposed earlier, we had, kind of started speaking to our buyers and the government, of course. And we had, we were able to find a way out of it because we thought, the consumer, we told the buyers that the consumer should bear part of it. the buyer should pay a part of it, and the exporter should bear part of that. And we were arriving at some kind of an agreement, even though it was very devastating. But now this additional 25% tariff is really will break our backs. So this is something which, whether it be small exporters or large exporters, nobody can bear this. And the buyers have already started walking away. Let me be very honest. Since the last 2 days, buyers have they cancelled orders. They've asked to stop orders, whichever are in production. And they have clearly said that they were moving back to China. This is
okay.
horrible.
We take your point. We take the concern on board, sir. So what you're saying is last 2 days, some cancellations have started happening. But otherwise, if it was just 25% tariff, you tried to work out a sharing formula of sorts that everybody picks up a part of the load. I believe there were some conversations as well with the government on higher duty drawbacks, some more incentives. Can you just elaborate on that? What is your ask from the government right now?
Well, you see, AEPC had requested the government for some direct fiscal intervention. I cannot specify what exactly it is, but we had asked them to support us directly through certain schemes. And of course, the scheme that I can talk about is the interest subvention scheme, which the government has withdrawn. So we had asked the government to reinstate that. And besides that, some other schemes. We also spoke about, the ROCTL and ROTEP being extended for the next 5 years, which the government has agreed. But that is something which is very small. That will not really help us with that 25%. So what we are looking at is more support from the government. However, let me also be very candid that it is, I think with this 25% additional tariff, even the government cannot support us. The only way out is now the government to start negotiation with the US government to somehow, remove this additional 25% tariff. Because if that doesn't happen, and I mean, this has to be, and this also has to happen like yesterday, because
right.
Our spring-summer orders are usually placed in the months of August and September. And we cannot even wait for the 25th August US delegation to come to India and then resolve this problem. This problem has to be resolved now.
Mr. Sekhri, a couple of questions. First, will you be able to reroute your exports to other markets like UAE, Europe? Have you already started speaking to other countries in GCC, ASEAN, Africa? Are you going to be looking at that more seriously?
Okay. See, let me explain to you. Out of that I'm talking about apparel here. Out of the $16 billion that we export apparel, about 5.2 billion goes to the US and about 7.8 billion goes to Europe. The other goes to smaller countries like UAE and Africa, etc. Now, this is US export is a major chunk of our business. Now, what we see here is that if we take textile and apparel together, this is about $10 billion. And with this 50% tariff, we clearly see the next 2 months, about $5 billion of worth of business is going to move out of India. Now, to come back to your question of looking at alternate buyers or countries, yeah, I mean, that's a process. That's not going to happen tomorrow. I mean, to get onboarding onto a large retailer takes anything from 1.5 years to 2 years onboarding itself. I mean, to be on the vendor matrix. So that's easier said than done.
Okay. And just one more point to complete the loop, because as of now, the expectation still is that this 50% tariff is more of a bargaining chip rather than a fixed policy, and ultimately the tariff rate could end up lower. So just for the sake of simplicity, if you assume 25%, what would be the expected sharing between you, the buyers, distributors, and the consumers?
Okay. You're talking about the earlier 25%, right?
Yes, assuming the tariff settles at 25%.
Okay, yeah, let's keep our fingers crossed and we assume that, we hope that this happens. But that 25% that was we were hit with earlier, that we had started talking to our buyers and we had asked them to split it 3 ways. One third would go to the consumer would bear it. 1/3 would be borne by the buyer. and 1/3 would be borne by the exporter. And out of the 1/3 to be borne by the exporter, we would go to the government and ask them for some support in some form or the other. Because you see, even that 1/3 works out to about 8.33%, which again is much higher than the net profit that a garment exporter makes.
Okay, that's on the apparel and textile side. Let's get to Mr. Vipul Shah as well. Mr. Shah, if we talk about all of our gems and jewelry exports, then US is a very huge destination, right? If you could just appraise us of the latest numbers as well. And what happens here? What happens at 50%? And let's assume 50% will not stay. There'll be something changing. But at 25% tariff, can it be entirely passed on to the buyers?
Yes, good morning, first of all. And yes, it's a big catastrophe for the industry, for the gems and jewelry industry as a whole. We work on very low margins, and it's a very labor-oriented industry as such. With 10% baseline tariff itself, we were struggling. And effective from today, it's going to be 25%, which we have not yet absorbed. And on top of it, we are hearing this news of additional 25%. So the industry has come to a standstill. We don't know, and we will be figuring out what exactly would be the next step, because the gems and jewelry cannot be going into this kind of tariffs, and the business to US will be completely standstill.
Indeed. Have you spoken to any of the companies, sir, in the gems and jewelry space? Are you also hearing about orders being cancelled, buyers walking away? I mean, what's the extent of pain we will see?
Yeah, see, the majority of our exports to US, that's in the form of studded jewelry, goes from SEZ. That's almost approximately, say, $7 to $8 billion of exports was going from there. So all the orders right now are on the standstill, because until now it was 10% baseline tariff and some kind of activity was taking place. But with 25% kicking from today, all the orders were standstill. And now with this 50%, it is a no-starter. So we don't know exactly. So for some time, we have to just wait and watch what's happening, what's going to hit next, because then only we'll be able to start thinking how do we move forward, because we need to see our competitors, like countries like Vietnam, Turkey, they have lesser tariffs than India. So maybe in coming months, if things are not sorted, industries will start moving. That's going to be a big blow to our employment. So I'm seriously looking for the support from the Ministry of Commerce. I'm sure they will be looking into this industry very closely and try to take some appropriate steps, what they did in COVID times.
By the way, we're getting statements from the Prime Minister, and that's the first line that we have. Just going to see if we can get a transcript and more on this. The first line is that India is not going to compromise on farmers' interests. It takes us back to the crux of everything that we've been discussing with experts right from the morning. The reason why this deal is stuck is that there seems to be no give up, no let up from the US side on the critical issue of dairy and agriculture. And there's a lot of political pressure also obviously building in, saying that India should not back down, ready to face whatever it takes to protect interests of farmers. There you go. You've got a statement now from the Prime Minister himself. The MEA statement yesterday was quite measured. The MEA statement said that India will do what it needs to do to protect its national interest. And the Prime Minister now seems to be spelling out that national interest very, very clearly, that we are ready to face whatever it takes to protect the interests of farmers. And India is not going to back down on at least the agri piece, agri and dairy. That's what it looks like. So for all the participants in the market and all the commentators and everyone who's hoping for a deal to happen immediately, the oil piece, yes. The oil piece perhaps can be dealt with, can be negotiated. India has already stated its position of buying more LNG, buying more oil and gas from the US. That can still perhaps be discussed and debated. But it seems from this statement, it's very, very clear that farmers' interests are sacrosanct, they're paramount, and India does not want to cave in, at least on that one piece. So we need to see, even if the 25% oil tariff goes, will India still have to deal with a 25% tariff overall from the US? But I don't think the last thing has been said to this, which is why I've always been saying that I think we need to be a little cautious in terms of assuming that this is going to be immediately resolved. These things don't work that way. Negotiators have been at it for 4 months now. Clearly, there are some issues which remain stumbling blocks.
Well, that's right. Our Prime Minister standing up and saying, I'm going to hold on to my stand. I'm going to be protecting our farmer community out here and taking that stance. So now all eyes on what we can work out with the United States with regard to oil as well as defense.
Absolutely.
Maybe some kind of negotiation on that front. So that's the latest statements. We'll keep getting you what our Prime Minister has to say. But it's not been such a bad morning going by the overnight news. Mitesh joins us. Mitesh, not so bad as of now, but what is your trade on the Nifty? And then fill us in with a couple of your trading calls.
So, Nigel, you said perfectly, not so bad. In fact, it's not a market which is falling freely. It's managed to bounce back a bit. But again, I would want to see if the closing is about 24,500 and we are right there. So we'll keep a watch. On the stock side, I have one buy and one sell. CG Power is a buy call with a stop just below levels of 675, 674 for target of 706. And Kotak Bank is on the negative side. Sell here with a stop at about 1990 for targets of around 1935.
Okay, all right. Thanks a lot for that, Mitesh. Well, I'm tracking Jindal Stainless and the numbers were very, very good. I stick to that. If you look at it on a sequential basis, the volume numbers are more or less flattish. On a year-on-year basis, though, it was much higher. The problem is yesterday, intraday, the stock from being down close to around 2%, it had ended with a gain of around 2%. So it appears there was an element of pre-positioning out there. And because of the overnight news with regard to tariffs, that's what's hurting sentiment. But let's pull up some of the graphics with regard to how the numbers were. That's the volume number. Good growth is what you're seeing on a year-on-year basis. And most of the top line growth has come in on a year-on-year basis because of, of the higher volumes. The EBITDA number, though on a year-on-year basis, it appears just a little bit better. The margin improvement is something that you like on a sequential basis. So just take a look at the way the margins have recovered. Last quarter, they did around 10.5%. This time around, it's a recover to close to around 12.8%. Even on an EBITDA per ton basis, the entire realization gain of around 4,000 rupees per ton, that's come down to the EBITDA per ton as well. So realization gains have flown down. So you like that at around 20,000 rupees on a per ton basis. The debt number is more or less constant in spite of going in for some capex. And one of their subsidiaries, which is JUSL, out there, the operational performance as well has improved. So the reason the stock is down is because maybe an element of pre-positioning, maybe some uncertainty on the tariff front, given that their export contribution from around 17% or thereabouts around 8 quarters ago, it's come down to around 9%. So they'll struggle on the export piece, but otherwise, these numbers look good. There's a sequential recovery in terms of the EBITDA per ton. But talking about metals, let's hop across to Manisha. She's joining in to tell us about the commodity markets. Manisha?
Nigel, thank you for that. I'm keeping a keen eye on the tariffs right now because 25% kicks in from today. And we've been speaking to various segments and sectors within the Indian markets, which are not very comfortable with that 25%. And the 50% that could happen in the next 21 days clearly has many of these markets very, very jittery. Well, India is one of the most heavily tariffed country as of now. Brazil is one, and Brazil only has a few commodities that are tariffed at such high price. But India clearly looking at very dire consequences as we've been talking to many of those segments there. I'll start with gem and jewelry, and you were talking to the former chairman of GJPC. Now, $9 to $10 billion of export of gem and jewelry happens to US. It is 30 to 35% of our export market. And from where the things stand right now, exports at 50% are absolutely not viable. As he said, 10% was not good, 25% was jittery, and 50% is something that they can absolutely not work with because this industry works with 3 to 4% of margins. So even as you break down those margins as in sense of they will take less profit, the consumer will have to pay more. But even with that, there's not too much happening. When you look at the GJPC numbers, the exports to US in the month of July fell by 75%. And many of the industry participants tell us that for the month of August, you perhaps may not see anything at all. It could be to zero because it's everything as at a standstill. It's not just gem and jewelry. When you look at the Indian textile numbers, well, $8.5 to $9 billion of a market is what US is for us. That is 35% of total Indian exports. And when you look at that breakdown of numbers, apparel exports to US is $5 billion and home textile is $3.5 billion. At this point in time, they say they will lose out to other markets, which is in sense of Vietnam, Bangladesh, Turkey, China, Pakistan, etc. With this 25 to 50%, India is just not competitive in the international markets. So there are concerns coming in for this one as well. The third industry I want to put on the table is India's seafood industry. So here as well, the numbers stack up to $2.7 to $3 billion of exports to the US markets. And we already are estimating something like 24,000 crores of a loss if we actually do see that 50% of tariffs come into the market. It's a big disadvantage for India. This has been one of the most growing segments in the Indian agriculture or farm industry for that matter. So this could be a big hit as well. This industry as well is seeking government support to explore alternative markets or incentives to export to begin with itself. And the final one that should come in on your screen is the rice exporters. Now, basmati and semi-basmati is what is exported to US, and that market is nearly about $42 million. So lesser than the earlier segments that we spoke about. But here as well, it is going to be not competitive. And when you look at the numbers overall, we understand that the in-transit cargo is allowed till 15th of September. But beyond that, no new cargoes, no new orders are being talked about right now. India could actually be losing its to Thailand in sense of rice and its competitiveness as well, to Pakistan as well for that matter. And trade stands suspended until there is clarity. That's exactly the line that we've seen coming from everybody. That trade is suspended, no new cargoes or no new orders are being discussed, whether it is gem and jewelry, textile, seafood or rice for that matter. There is no trade at this point in time until there is clarity.
Thank you, Manisha, for that. In fact, we're getting in Prime Minister Modi's first reaction to that 50% tariff hike, Trump's tariff hike. And his message is firm. The interest of farmers remains paramount. Listen in.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Okay, that's a strong message that the Prime Minister has delivered at a public event. I think this event was happening in New Delhi. He's spoken just a while back, and a loud and clear message going out that India is not going to compromise on the interests of farmers or, of course, people in the dairy industry as well. So it's as clear as it gets. And like Nigel has been saying, that and that makes absolute sense and logic as well, that you can negotiate, you can talk about energy, you can talk about defense, you can talk about tech transfers and all of that.
Not at the
but
cost.
you draw the line on agriculture, on farming and on dairy. He spelled it out. We've drawn the line. So let's see.
Jeffrey's put out, they're saying that 200 to 250 million farmers or labor derives their income from agriculture in India.
Yeah.
And that's 40% of India's workforce, and therefore it's a strong political lobby. And plus, there is also an additional estimated 50 to 60 million dairy farmers. And the influx of US dairy products can potentially cause a significant decline in milk prices in India. So we're talking about big numbers, right?
Yeah.
250 to 300 million people could be potentially impacted.
Okay, talking about numbers, let's get straight to Bharat Forge. That's the company on our radar. The last quarter's numbers, well, it was plagued by uncertainty, and things are likely to continue in that direction. Going ahead, let's welcome Mr. Baba Kalyani, the Chairman and Managing Director at Bharat Forge. Good morning, Mr. Kalyani. Well, we know, I think, your business has close to around 40% export exposure from the international markets. How much of it is to the United States? And you've also got a couple of plants in the United States. So what are your plans to mitigate some of this pressure with regard to the tariffs?
Well, I think, it's very difficult for any industry to mitigate a 50% tariff.
Yeah.
Well, let's understand that. That's impractical. We've been talking to our customers. The customers understand this. They're supportive. And they all believe that there will be a political solution on the table sooner than later. So we are all hoping for that, and let's hope that this happens quickly. Mm-hmm. And because, manufacturing industry has spent almost 30 years cultivating that market, creating capability, creating the knowledge that is required to supply into highly technology-oriented markets and technology-oriented components.
Yes.
And you can't just wish it away overnight. It's just not going to happen.
Right. And just to clear out that number, sir, 40% of your business is the exports?
No, it's more than 40%, but our
And how much is from the United
US,
States? So just help us with both the two numbers.
I'll come to that. Our exports to the US are roughly about $300 million. $200 million, sorry.
$200 million, okay.
So, and all our customers are still supporting us, so let's see what happens. But obviously, the 50% number is just undoable. You might as well not have a business to do it. But I think there will be a solution in place.
All right. So close to around 10% of your total business has exposure to the United States, very roughly, right?
Exactly.
Sir, in the interim, while there is a political solution on the table, any of your clients, customers are deferring their purchase decisions?
No, nobody has deferred any purchase decisions. Matter of fact, we had a talk with one of our biggest customers just this morning at a early morning breakfast, and even he said that we need to go ahead with the investments that we have planned to support his product launches, which are coming next year and year after next. So everybody is, supportive, and everybody feels there will be a solution in place.
So now we'll wait by for what the tariff number settles at, 25%, 50%, somewhere in the middle. But in your conversations, sir, with your customers and clients, have they shown willingness to absorb at least some of the tariff burden?
But they are right now absorbing all of it.
All of it is?
Yeah.
Okay. And even if it comes at 25%, you will be able to pass it on entirely?
The tariff, no, 50% is not possible for anybody.
Not 50. I'm saying it settles at 25%, just, for a number, for the sake.
If you see our last quarter's numbers, we have taken a tariff hit of about 14 crores, okay, which is roughly about $1.6 million on an export of roughly 200 million, okay? So as a percentage is 0.8%.
Mr. Kalyani, morning, sir. Two different questions for you. My first question to you is on the 200 million US business that you spoke of, that, you're doing 200 million in revenue every year from the US. As a business group, as a conglomerate, would you at all, because of all this that's happening, would you at all consider investing in the US, setting up a capacity, either in the US or in some other geographies which have got the blessings of lower tariffs? Or do you think it doesn't make sense from an Indian perspective to do that at all?
We have two factories in the US. We have, in the last 2-3 years, invested a large amount of money to set up capacities in the US. And I think we just have to now make them work at full capacities. And so we see a lot of traction there. But there are challenges to make that happen, instantaneously. I think in a year or two, this will all happen. But that is not going to replace the products that we supply from India. Those are different products.
Got it. So if at all you expand in the US, it will be additional capacities, newer products, not at the cost of the investments you're putting in India. My quick last question to you, sir, is on the defense business. Just tell us what's the trajectory ahead this year that you see for your defense business in a world where, again, India is being pressurized to buy more and more from the US, and maybe we give in to that. I mean, we've never shied away from more US defense procurement. How do you sort of sum it up?
Our defense business will continue to grow. It will continue to grow in double digits. We have multiple programs on which we are working with the Ministry of Defense. And we are exporting a lot of our defense products. We might even have some exports to the United States very soon. So that business will grow and continue to grow.
You want to give us a number, sir, for the year? Because, from a run rate of around 250, 300 crores on a quarterly run rate, you had gone to close to 500 crores. And then in the last 2 quarters, again, it's come down to roughly 270 crores per quarter.
The problem is you export guns and the number goes up. When the gun order goes down, the number comes down.
So for the year, around 2,100, 2,200 crores of defense revenues is doable?
I don't know what our defense revenue last year was. It was about 1,600 crores, right?
Yeah.
And I think we should see roughly about 15-20% growth on that.
Okay. All right. That sounds, I'm sure your investors are going to be very happy with that, given the uncertain environment, still expecting that sort of growth for the defense vertical as well.
Another area where I think we see a lot of growth, that is aerospace.
Aerospace. Okay. Point taken, sir. Point noted. Thank you very much for joining in and giving us some perspective on your business. One Indian company that, of course, has its placement in several arenas, including auto components, including defense and aerospace. Well, we get back to market conversations now. The market's dipping again. It's about a 100-point cut as we speak, but it's just about 0.5%. Sunil Singhania is with us. Sunil's been waiting by patiently. Sunil, apologies, short delay there. We've just been, it's been a flurry of reactions since the morning, trying to understand the implications of what this new 50% means. But your sense, on if we, let's say, manage to work through the oil tariff and the actual tariff is still 25%, is this a bit of a, bottom in terms of peak negative news for the market? Does it get better from here?
Good morning, and thank you for having me. So, first of all, a disclaimer, we always try and be optimistic on Indian economy and markets, and I think that's played out pretty well over the last 2-3 decades, despite all the ups and downs which we have seen. I think this is also one factor which has obviously come up. I don't think we can ignore this. It's a major thing. But at the same time, it's relative. So as long as, we as a country are relatively okay compared to the tariffs on other countries, I think we should be fine. Having said that, I think the events of the last 4-5 days have been definitely not so pleasant. It's been a negative surprise. And as is expected by all, we also believe that finally, it's a question of negotiations, diplomacy, a lot of politics rather than only economics built in. And hopefully things will settle now.
But Sunil, do you think there is some amount of complacency that's being built into the market? I mean, the reaction to really bad news also seems to be such an underreaction. Even today, we're just down close to about 0.3%. Like, everyone is confident that we will be able to strike a deal, which is good for us. So do you think there is some complacency and that might get shaken up?
I think we've all grown up, reading and listening to the fox and the sheep story. And I think this is, again, similar to that. The first instance of announcements always have a big reaction, and that is what we saw in January and February, and then also in April. But subsequent to that, I think every reaction and every comment has not been held on to. We have had multiple to and fro, some countries, tariffs being increased, some deferred, some decreased. It's been a complete sort of a chaotic kind of announcements. And therefore, I think maybe that is the reason why no one is taking them as seriously as the first few announcements, which were in January, February, and then April were. So that is one reason. The other thing is, I would agree that 80-85% of the concerns which we have seen over the last 1 year seems to be behind us, in terms of geopolitics. World is a little bit more peaceful than it was. India, Pakistan, and the Middle East scenario, I think, except Russia, Ukraine, which continue to fight, most of the places are pretty, I would say, stable. The world is starting to grow a little bit, except this tariff issue. And even in India, you have liquidity in our favor. There's been a huge surge. Profits are slow, but they are recovering. So I would say that except this tariff, a lot of other things are sort of from a headwind starting to become a tailwind. And once this tariff issue is sorted, I think we can see a resurgence of optimism both in the economy as well as corporate profit base. And maybe, investors are looking at that. At least we are looking at that.
Okay, so perhaps close to the bottom. That's the sense one gets. So, Sunil, in this environment, because even if, like you're saying, that, gradually once this tariff issue settles, other issues seem to be already, settling down, leave us with an outlook on how one should be looking at a, portfolio from at least, let's say, a one-year basis, because things are still very confusing. You still don't know what happens with pharma. Should you be only looking at domestic-facing stories? I mean, EMS, etc. At some point, if electronics gets hit, so a lot is still up in the air. So, where should one place bets where there's a reasonable conviction in terms of growth and then hopefully stock price appreciation?
So, yeah, I would say that at this point of time, we should not do too many changes to the portfolio because it's still a scenario where everything is not settled down completely. We don't know the final end to this whole saga. I'm very sure the end is pretty near, at least in terms of clarity. So let clarity comes. We continue to like pharma because irrespective of what happens, I think Indian pharma is the most competitive in the world. And we are not exporting, medicines at 10x the price or 20x the price, which Trump is alluding to. We are more a support function in terms of our CDMO in generic pharma space. But I would say that rather than trying to do too many, changes in the portfolio at this point of time in an uncertain environment, it is better to be patient. I know that a lot of people got very excited on export-oriented companies when tariffs on other countries were levied, and we all know what happened when the same was done in India. So it is better to let things settle down. I would say that don't make too much changes in your portfolio over the next 15, 20 days. Just bear with this whole uncertainty. I know it is a time when one has anguish and one has anxiety, but it also pays to do nothing in these kind of times,
Okay, advice well taken. Sunil, thank you so much for joining in today. Really great to get some perspective from you on a morning like this, very, very uncertain times. But Rima, that's actually 2 thumbs up for pharma. Pankaj Tibrewal on the show today saying, don't get worried, stick to your pharma bets. And even chemicals, a sector that he likes. And Sunil also saying that...
Pankaj spoke about CDMO and the domestic pharma plays, which I presume like the hospitals, etc., which are fairly unaffected. Okay, but that's the advice coming in from Sunil Singhania. Weather the storm for now and wait for clarity. Don't tinker around too much with your portfolio. Let's get into a break for now. On the other side is our special segment. It's The Economy. Lata will be in conversation with Soumya Kanti Ghosh of State Bank of India and Lakshmanan V of Federal Bank on the impact of Trump's tariffs on the Indian economy.
Well, the shocking additional 25% tariffs imposed by Trump is likely to see at least a 0.5% hit on India's GDP. But no economist whom I spoke with has yet revised their figures in anticipation that some deal could be reached before August 27. The current account deficit may also be hit by around 0.2 to 0.3%, some economists told me, because goods exports can fall by about $30 billion. That's to the US. The rupee is, however, steady as of now, and dealers are attributing this to the presence of the Reserve Bank as a dollar supplier. But everything is speculation. To understand more about the direct and indirect impact on the Indian economy, I have with me Soumya Kanti Ghosh, Group Chief Economic Advisor to the SBI Group and member of the Finance Commission. I also have with me Mr. B. Lakshmanan, who heads the Treasury at Federal Bank. Gentlemen, good morning and thank you very much indeed for joining me. Soumya, I'm getting figures of 0.5%, 0.6 in terms of impact. Any ballpark impact on the economy, GDP?
Yeah, thank you, Lata, for having me on the show. I think in terms of the GDP impact, we have on the 25% tariff was actually become operational. So we have actually factored in a 20 to 30 basis points decline in the GDP. The additional 25%, if we go at the same rate, which is a little difficult, a linear approximation, the hit could be actually larger. But as of now, we have a projection at GDP projection at 6.3%, which is lower than the RBI baseline forecast of 6.5%. So that's why we are sticking to the GDP forecast of 6.3%. But we may actually look into the numbers in details if the possibility of a trade deal appears a little difficult in the remote horizon.
Oh, okay. Yes, that's very, very fluid. That's the kind of replies I got when I tried to do a poll. What about current account deficit, Soumya? Immediately, there will be, that amount of dollars not coming in by way of exports.
See, in terms of the current account deficit, this year we have been looking actually at a current account deficit, which is significantly lower than 1% of GDP. So maybe in the range of around 0.5% or 0.6%. So even if suppose the current account deficit goes up by around 20 to 25 basis points, it will still be below 1% of GDP. The good thing about the current account is that in the last couple of years, the service exports have significantly caught up with the goods exports also, if not outpaced it. So from that perspective, I think that has been a positive, and that actually had a significant positive impact on the current account deficit. So on that CAD front, as of now, we are not too much worried. Because we believe that the other aspects, the other components could actually make up for the loss, if any, in the goods exports.
Okay, the current account and capital flows are telling on the currency at this point in time. And let me invite Mr. Lakshmanan on that. Good morning, Mr. Lakshmanan. Thanks for joining. What are you picking from the market? The rupee hasn't moved. If anything, it's a bit stronger.
Yeah, no, thank you so much for having me here. I think the markets of today morning, beat the rupee market, beat the bond market, beat the stock market, I think are reasonably, evidencing the fact that this is another one of those shots that we've seen on every single morning over the last few months. One. Second, if I were to just reflect to you another small data point, if you just look into the FPI flows, right, over the first week of August, I think on the 1st of August, if I recall, we perhaps had more than $500 million kind of a negative. But for the rest of the days, the flows have been broadly par, to the extent yesterday's number, when I saw this morning, was actually a plus 250 million, all asset classes put together. So all I would want to say is there's reasonable evidence that market is not wanting to overreact at this stage. Very clearly, everyone would want to wait out for the conversations to happen, and then take any action. So overall, from a currency standpoint, if I were to state, the level of 88 that we saw a few days ago continues to be a strong bar at this particular point. And it's only after one more conclusive evidence of action in some fashion beyond just this rhetoric that we've seen, / any dollar currency move which takes the dollar significantly back stronger from the dips that's seen right now, it's about 98.
No, what's your forecast in terms of the currency?
88, as of now, as a resistance still remains, in my view. So
sorry, what remains?
88 as a resistance at the higher
resistance remains.
Still remains, and I would not want to take a conjecture at a level going higher till the time that particular level breaks, which essentially means that an 86 half to an 88 kind of a thing would remain, unless, as I stated, there are incremental actions beyond this, which mean more than rhetoric. / dollar goes up much more strongly across other currencies.
Okay, got that. Soumya, what is your sense? Should we be prepared for 88 plus 89 sometime soon?
No, I think so. On the rupee front also, if you look at the reaction today, I think the markets are now accustomed to the fact that this possibly could be the more the additional tariff which is being implemented by the US, the more it indicates that the US is actually want to strike a deal with India on the tariff front. So from that perspective, the thinking in the market is that possibly, because no country or no country can survive within 50% tariff rate in the long.
Yeah.
So if that is the logic, I think the markets are now getting more attuned to the fact that there will be possibly a deal in the future, which will give some takeaways from here and there. So my sense is that the weakness in the rupee, I don't see too much significant weakness in the value of the rupee, maybe some additional 20-30 paisa movements, but overall, I think the rupee has actually run its course because the numbers on the external front still look favorable to India on all multiple fronts.
Yeah, but it is on a dime turning negative because of the capital flows. That's why I asked. And today in the chatter, people were kind of freely talking like 89 is back on the table and things like that. But Soumya, more importantly, we discussed the direct impact as about 0.5%. If it went to 50, which is an unreasonable level of tariff. What are the indirect impacts? The people who are exporting to the US, the top two industries, gems and jewelry and textiles, are very labor intensive. So are there more indirect impacts as well?
I think this is a very important point, Lata. First, I think we should understand the Indian export dynamics to the US. India's overall export, if you look into it, 20% goes to the US, but India is also diversified. The top 10 basket of India is around 53% to several countries. The second in the list is the UAE. But having said that, I think if you look into India's top 10 primary exports, the first is the electrical machinery, which is a share of around 18%, which incidentally is exempt from all this tariff because that also includes smartphones. Next comes gems and jewelry 11.5 and pharma 11.3. So textiles actually the share is around 3.4%. So my sense is that there will be indeed the most important impact will be on the gems and jewelry segment and the textile segment. On the pharma segment, the interesting point is that if India were to say, for example, the Putin countervailing tariff tomorrow on the pharma products, it will actually hurt US much because the share of India's pharma exposed to US is around 47%. So, from that point of view, I think the impacted sectors will be gems and jewelry, the textiles, and also to some extent the autos where the government is actually trying to broker a deal. But the problem will be basically on the sectors which are labor intensive, where it will be difficult to strike a bargain.
So, people keep telling us that therefore we must use this adversity to reform. In 1991, the Forex crisis, we reformed. In 2013 as well, we replied with an inflation targeting framework and all that, when currency was hurt. We reform under crisis. So what is the reform we can do? And separately, should there be some packages for those who are in the line of fire, the gems and jewelry and textile exporters? Should they get some kind of, subsidy from the government?
Yeah, I think that's a very important point. Yes, we reformed. You have reformed in 1991. We have reformed also. We have been doing small incremental reforms. I think one of the first thing which comes to my mind, I think in the budget, there was an announcement that there was a policy of exports, agricultural exports policy. I think now it's the time to actually unveil the policy. Also, there has been several pending reforms which has been announced in the union budget. One of them is setting up the regulatory commission, which basically looks into all the aspects of regulations. I think that a working group has already been set up in RBI to look into all the master circulars and to prune it down.